Hey there, it's James here, and in this video, I'm going to talk more about the market as a whole and also more specifically Bitcoin and cryptocurrency. So first things first, let's take a look at the market as a whole. So we'll look at the QQQ. QQQ, it surprised me today. It was in this daily range. I actually figured we'd get some type of rejection here, not necessarily the top of a bull market, but just some type of rejection. Thought maybe we'd get a little baby pullback before another shot at the top, gapped above this range. So this is super interesting. I don't know that it really tells me a whole lot about what's going on. It could be that this is the last puke, trying to trap bulls before a move down, but I'm certainly not going to stand in front of this train until I have more definitive signs that the top is actually in. So for now, I'm simply sitting on my hands on the larger time frames, kind of waiting to see what the market does. And that being said, I am 90% sure that this is indeed the euphoric phase of a 17-year market cycle. And I've mentioned in previous videos that euphoria phases often double. We don't know where it's going to double from. Is it from here, wherever? So again, don't want to stand in front of the train, but I do believe it's in a euphoria phase. And that's a really big problem that so many Bitcoin bulls just refuse to acknowledge. And I'm doing my very best to kind of educate people, but it's a losing battle because when you're in the cryptocurrency space and you're trying to talk logical sense, you're essentially the sober guy at the party and nobody wants that. I'm basically pissing in everyone's Wheaties and telling them that the good times are about to be over with. And I understand why that's frustrating. I understand why they don't want to hear that, because it's easier to bury your head in the sand and pretend like everything is okay, even when it's not. So real quickly, here's the thing that you have to understand. Bitcoin is not a store of value. That doesn't make Bitcoin bad. It doesn't make Bitcoin evil. It's not a store of value. Stores of value, their number one job is to maintain value. Now, Bitcoin has done that versus fiat. It's obviously appreciated in value. But stores of value are supposed to have low volatility. Bitcoin has not met that benchmark. It is a risk on asset. And historically speaking, what we've seen with Bitcoin is that it's correlated to the tech market. And that when the tech market goes up, Bitcoin usually goes up. That's not what's happening right now. And when the tech market goes down, Bitcoin usually goes down harder and faster. So for all the people who are saying it's a 4-year cycle, we got to wait this 12 months and then it's guaranteed to go back up. I don't know what it's going to do and what it's not going to do, but I do know that data suggests that if the QQQ goes into a bear market, Bitcoin will melt down. I had a somewhat of a tense exchange on Twitter today, which is not unusual with these permeable maxis. They get very upset when you push data in their face that kind of refutes their claims. But essentially, this person was saying they knew, like, for sure, Bitcoin would never go below $40,000. Nobody knows that. Just like I can't sit here and say that Bitcoin will never be worth $100 million. It's unlikely, but I can't say it's impossible. We just don't know. So as I point out the data, this is the thing that I really want you guys to understand. They're never going to accept it because they're making money off of engagement. They probably don't even believe half the stuff they say. But obviously we had a bull trap. I've talked about this in other videos. All right, this is Bitcoin versus QQQ. And it is critical that you understand, if you didn't see the other video, that right now Bitcoin is worth less versus the QQQ than it was at its peak in 2017. So that's 8.5 years that it's basically less today than it was then. That's a very, very big problem in Bitcoin. And what happened is exactly what I said would happen. I even made a post about it back in August of last year over on TradingView. At the time, right, this TradingView smushes this up on a HD bottom for some reason. But at the time, this was the Bitcoin chart versus the Mag 7. So it was up here around 324.5 shares of Mag 7 for one Bitcoin. And literally from that post, it just fell off the cliff, just like I said. It's a log chart, so it looks much smaller than it is. It's actually sitting just over 200 points today, or 200 shares. So think about that drop from around 350 or whatever it was down to 200. It's a massive drop. And if this continues to play out, if this was the upthrust after distribution, which would be phase C, that means we have now entered into phase D. And we would be somewhere around this point. If this plays out and continues to follow this distribution schematic, it will reset the entire move. So basically, we would be looking at retesting these levels back around 2016 levels, probably down around 10 to 20 on this chart. Now, people are going to say, nope, nope, can't happen. It's impossible. You're talking about a 90% plus drop versus QQQ, blah, blah, blah. Okay, listen, even great assets, let's not pick on Bitcoin and say it's bad. I don't want to go down that rabbit hole because that's just all subjective. We're going to look at it objectively. Let's say that Bitcoin is not bad. Let's say that it survives. Let's say that it eventually becomes all these things that people, say that it's going to become. Okay. That doesn't mean it can't fall 90% versus the tech stocks. Right now, it's sitting down 53% from its high. And in previous cycles, when there was not a bear market in equities, here's a 71% drop. And then back in 2017, it popped and fell 84%. So that's during really good economic backdrops. That's with tailwinds, right, in its favor. But if we go into a bear market, it's not going to have tailwinds. It's probably going to fall even further. And if you look at other assets and try to model them or try to say, well, what did other big winners do from the dot-com bubble? Amazon is probably one of the biggest winners from the dot-com era. A lot of people don't realize it. It fell about 95% versus US dollars, but it fell even worse, if I'm not mistaken, versus QQQ. So not quite as bad as USD, but it fell 90.69% versus the QQQ. Amazon was still a great company. It was still a great buy. And the people that bought down here actually had an opportunity to make unimaginable wealth off of that buy. They were certainly a lot better off than people who bought back here. So saying that Bitcoin will fall 90% versus QQQ if we enter into a risk-off environment, I really don't know why the Bitcoin maxis get so upset. Well, yes, I do, because they're not really believers. They're hopeful. They're not really delusional. They're just desperate, right? And I try to keep that in mind when I get frustrated. They're desperate. They view Bitcoin as their one and only shot to get rich, to change their lives. And I'm not saying that to make fun of them, because I was the same way when I started. I'd had some successful business ventures, but then I lost all my money, and then I had some successful runs and lost my money. And because of the autism, the disability, and all that kind of stuff, sometimes I would only be able to work a couple months a year. So I'd have these great months where maybe I made 100 grand, in a month or so, but then I wouldn't be able to work for 6 months or for a year. And so when I stumbled into Bitcoin, I thought, man, if this, does the things they say it's going to do, it'll solve all of my financial problems. And it did, in fact, solve many of my financial problems. And so I'll always be grateful that I stumbled into cryptocurrency. But at the same time, you can't let that cloud your judgment. That is a very, very dangerous thing, desperation. If they really believe in Bitcoin, they should be super excited at the opportunity to buy Bitcoin when if it falls 90%. Okay, because if it's as good as they say, it should come back. It should go back up. So all in all, if you're a Bitcoin bull, this is a positive opportunity for you if it happens. And we don't know that it will happen. But this is not unusual. When there's bear markets and risk off, you will often see the hottest assets fall the hardest. Like Microsoft, back in 2002, it topped and then it proceeded to fall about 70%, if I remember right. Yeah, so about 70% versus QQQ. Obviously today, actually, it's probably not doing that good today either, is it? So it had a pump, but yeah, it's just kind of moving sideways. That's kind of surprising. But Apple's another one, right? Apple, life-changing money if you bought it back at the bottom of the dot-com bubble. This is not the real Apple chart. So dot-com back here, it topped and crashed 75%. This is just normal behavior. So I don't anticipate that Bitcoin is going to be different from old tech assets. And again, if it is in fact going to be all these amazing things that people suggest it could be, and I don't know if it will or not, but if it's going to be those things, it still doesn't prevent it from falling much further than what people anticipate. If you want to own Bitcoin, I'm not suggesting that you should buy or sell Bitcoin. Those are completely personal decisions based on your financial position, not mine. I'm risk adverse. I'm very open about that. I am not chasing gains. I am not in growth mode. I am in pure risk adverse mode. Right now, I'm moving some of my funds into things like bonds, capturing these 5% yields and then expecting in the future, bond rates will drop. The bonds will go up in value. and then I will be able to offload them for a capital gain while also having been paid 5% to wait. Historically speaking, like in the dot-com bubble, there was a period where for several years, the returns were basically flat, even negative. I don't want to get caught in that. Now, that being said, if you're younger and you're in a more growth mode, the fun fact is if you invested at the very top of the dot-com bubble, from then until now, your average annual return was still about 7%. So it wasn't terrible, but you had to wait a long time, basically going at 0% or near 0%, and then have a bunch of really good years that made up for that. I don't want to wait a long time. I just want to make my 5 or 6%, and chill until the market is under, water, basically undervalued. And then I'll look to pour a lot of my investments back in, a lot of my capital and back in. I'll put it back to work. Right now, most of my capital is in very, very safe places. I'm not heavily exposed in stocks or cryptocurrency. But that's my personal finance. That doesn't mean it's the right move for you. The only thing that I want to do in these videos is educate you and make you understand what is possible. Not what's, guaranteed to happen, but what's possible. Because if you're somebody that's going all in on Bitcoin, and then some of these things come to pass, it could be devastating for you. And I always tell this story. Somebody came to me in 2017 and their life was falling apart. Their wife had left them. And it was all a result of they overexposed themselves to crypto. And then when it crashed in December of that year, they lost everything because they were overexposed and over leveraged. And so keep that in mind. When these markets melt down, a lot of people are over leveraged and they are forced to start covering. If you're long and you have to cover that long, that is a sell, that is selling pressure. And these markets can move down very, very fast and very, very hard. And if you're new to the market, you've never seen this. But if you're not, just think back to COVID. Now it's kind of just a blip in the radar. We barely even think about it anymore. But if you remember how brutal that COVID crash actually was back in 2020, that was a small taste of what can happen. Think about that. The market went risk off. People started panicking in the stock market. And this was the candle. It opened up around $8,000. And by the low of the next trading day, it was under 4,000, over a 50% drop in one day. So you don't want to get caught on the wrong side of that. If you're really intent on owning Bitcoin, you also don't want to get caught in a candle where it pumps, 10% a day. And now you're like, I don't know, do I chase the market? Do I wait for it to come back down? What if it doesn't come back down? Because it doesn't always come back. Remember that. Think about this back here. This big old pump from around 17 to over 20, 21, and it never came back. Now, maybe it does eventually, but even if it does, you missed this whole move. It's a very dangerous game to try to trade 100% of your portfolio. And I don't think it's the right idea for most people. So if you're a Bitcoin bull, I'm not going to sit here and make fun of you for being exposed to Bitcoin in any way, shape, or form. The only people that I have a problem with are the Bitcoin maxis, who basically push the idea that Bitcoin is guaranteed to go up, because that's completely false. It's not true at all. They push the idea that Bitcoin has been outperforming other assets. It has not. Bitcoin outperformed if you were early, but if you got involved in the last 5 years, it's very, very timing critical. If you got in at perfect timing at like a bear market low, then you're doing okay. But if you got into the top in 2021, you're doing terrible, right? Yeah, you're slightly ahead versus US dollars, but you're in terrible shape versus inflation. You're in terrible shape versus other assets. The opportunity cost was absolutely massive. The one scenario that I see is highly unlikely is a scenario where the QQQ and the broader equities market begins to melt down, go full bear market, and then Bitcoin somehow has a bull run. I do not anticipate that's going to happen. And you have to remember that bear markets and equities typically don't resolve in a matter of months. It's typically a long drawn out process. The 2022 was a little bit weird because it only took about a year to bottom, but that's because the AI bubble kind of reinflated everything. Had it not been for AI, we'd probably still be in a bear market or, just now ending the bear market from 2022. Not necessarily ending it. We probably would have already bottomed, but we'd probably be grinding sideways. And so we don't know how Bitcoin is going to behave if we go into a global bear market. If it takes, 5 or 10 years for the stock market to recover, what does Bitcoin do during that period? And the answer is we have no earthly idea because we have nothing to base it off of. But keep this in mind. When the dot-com bubble took place, it took roughly 16 years for it to reach its all-time high. That is a long time to wait if you're an older individual. So word to the wise, make sure you're planning based on not just what you want to happen, but how old you are, what your time horizon is. All those factors come into play. Please stop now and hit that thumbs up button. Subscribe to the channel if you haven't already. Please share the video with a friend that you think would benefit. And as always, please remember that I'm some guy. I'm sitting in a spare bedroom. Nothing in this video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, forex, or any other tradable asset. Thanks for watching. And as always, please remember to trade safe.